so we can rewatch it. And
100%. Yep, yep, yep.
thank you.
You got it. You got it, brother. All right. So this one is decision level type 1. Type 1. It's pretty much like an engulfing level or like an order block level. And if you guys traded smart money, that's how you would mark it. Basically, this is a bearish example right here. So in my charts, bullish is yellow and white is bearish. So for this one is this right here. So for the bearish example, your decision level is this right here. And for your bullish example, for type 1, decision level is this right here. Okay. For this right here. For type 2, it's very similar to what this is, but do you see how it takes only one candle, regardless of it, it's consuming the previous open of candle, the whole candle. So it could be like even the smallest closure above like this, or it could be like this, or it could be like this, but regardless, it's changing direction. Price at one point was probably like this, and then price closed above this. There's a lot of information that you can get from this right here. And one thing I'm just going to well, actually, I'll do that after I explain types 1, 2, and 3. Okay, so that's type 1, and type 2 is pretty much very similar. Is when you have multiple candles that engulfs the previous color, so the color trend will change. What I mean by this is like something like this: when you have, say you have a bullish run, and then you have 1, 2, 3. It could be 2, it could be 3, it could be 4 candles of the bearish color that will eventually consume the bullish candle. So this would be your decision level here. Did this open and close level close below this level? So then this would make your decision level and price would need to come back around here. I'll go over examples on the charts, so no worries.
So is
Um,
this like a gap, Robbie?
it's like a gap.
Okay.
Exactly. Exactly. So, I've taken a bunch of SNR mentorships before, and the way of identifying them just very quickly, I want to explain to you how my system, how this system is different is the fact of where you're identifying decision levels. So before, let's go to H4. We'll stick to H4 only today. What you would have done to identify would be to literally mark out every one of these levels. You would see that, oh, this is a fresh classic SNR level, and you would take the sell here, but then it wouldn't hold. You would take the sell here, but then you would get stopped out. You would take the sell here because it's a fresh H4 level. You get stopped out. So what the decision levels will do essentially is help you actually filter out all these levels that you don't need to really focus on. The true decision level, as you can see, is this type 1 right here. And as you can see, it pinpointed exactly at our level. And when we learn about trend lines, literally it will help you get entries just like that. This is one of our signature style trend lines. We'll go over that as well today as well. Um, after our lesson on DLs. So yeah, that's pretty much how the reason why I don't use SNR, just regular SNR anymore. What I mean by regular SNR is like this is a fresh support level. And this is another fresh support level. But you see how instead of price actually reacting to this fresh support level, it actually just reacted to this level here. And then what you see here is again another decision level being created to the upside. And then it took the price up. So that when you do your homework, I'm gonna give you a written text format of what I want you to look for when you do your homework. Um, but this is why again why I don't use regular SNR. Because if you begin to use all the SNR levels, you will get reactions from them levels, but the way to filter them, I think, is completely skipping them directly and only just focusing on the DLs. And when we use the market flow system with monthly, weekly, daily, we'll be able to say, okay, monthly is bearish, weekly is bearish, daily is bullish. So we're going to identify, you can see that there's a DL here, and then using the lower time frames, we'll be able to take part of swings and the intraday plays that take price back up into our weekly, monthly bearish key levels. Okay, so let's go back into what this looks like. All right. Let's go to H4. And yes, so it's pretty much an opening close level that consumes the open of the bullish candle. Just to give you some more detail, it's gonna have like a wick, obviously, the candle. We only care about it closing below the open. Same thing goes with this as well. The open of this level will give us the idea of the breakout. So again, it's when price consumes the open of the previous open of the bullish run. This is a bearish example. A bullish example would be when you have something like this is actually bearish. Bullish would be okay. Bullish would be you have a bearish candle, so price is moving down, and you have multiple candles. It could be 2 candles, it could be 3 candles, it could be 4 candles, but essentially what you're looking for is the last open and close level that eventually breaks out from the open of this bearish candle. So
Question, bro.
yes,
So for the engulfing,
yeah.
for it to be valid, it has to break like a gap or like an A or B level. But for type 2, inherently it's valid just when it breaks the previous
Yeah,
candle.
Yes, and I'm going to show you exactly that question
Okay.
is very, 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 very important. And as soon as I go over it's type 3, that's exactly what I'm going to explain. And that is pretty much paramount to the strategy is because there's going to be this all types of you're going to find now that you're going to be focusing on these levels, you're going to find a bunch of them. So which one do you actually focus on? And that's what I'm going to show you for sure. Let's do type 3 and then it's going to be a little bit more logic based and what we can expect to see from these levels after they break and what um after this breakout, why is this level so significant and why not this one and stuff like that. Okay. So this is type 2 a bullish example. Uh in bearish took two candles or it took three candles to engulf this. It could take, let's just say it could take two candles, and this is your decision level here. It could be like this, certainly. And it could be 4 candles, 5 candles, doesn't matter as long as price consumes it and it closes below. That was what signifies a breakout. Instead, so instead of price, usually when you have classical SNR levels, a breakout is being signified as when you when you break just the support level. It's this right here. What we normally would have done was we would either take the trade from this breakout level, or what you would be taught is you would look to trade back up here. Our system is going to consist of understanding that there is going to be a decision level here that gives us a sign that price is going to go down. And then there's also going to be something in the system that's going to show you that price wants to push back up. And yes, we're going to monitor the breakout level, just like such right here. I don't want to confuse you guys too much, but price could break out this level and retest here and go, and we will be able to identify if this level will hold or not, or it could come back into our source point, right? Our decision level point. So from here on out, what you can expect is this is DL type 2, but this is the source, and you can call this your SB, source break, SB. Okay. Type 3 is pretty much, excuse me, type 3 is pretty much just it's type 2. It's just an open and close. It's just open and close. And it's taking out something. So to answer Jordan's question, we are going to go into the charts right now and explain what I mean by that. Type 3 is you could just really consider as type 2, but it's essentially just an open and close that's taking out a previous decision level like that. But the result of this gap level is what is the closing doing? Like, is it rejecting something or is it closing below something? So you can see that just in this little example right here, toolbox, this little example here, you can see that price is moving up, and well, can say that price was moving down. And then price created this decision level to continue price going up. So what would happen is price would break out and then test this level, go up, go up, go up, find another decision level. And let's just say, for example, it is rejecting this decision level, and upon the rejection, it closes below your closes below the level, and then it creates this what you see is it's breaking out from this decision level. So then price would now turn into your bearish mode. And then what you would do is obviously multi-time frame is going to be part of the picture as well, but if you look at one time frame, what you would expect to see is price to come back to test either this level here or and then drop, or we want to see the decision level either come back up into here and then go to the source point. So I will share a PDF that will give you a picture of this, so no worries. I'm going to clear the charts and I'm going to show you exactly how you can now begin to and what is an actual decision level and why one decision level is going to be prioritized than the other. And again, we're just going to stick with one time frame and just for demonstration purposes. So I'm just gonna pick a random point in price action. Just go back to time. Yeah, let's just work with this guy right here. Okay. So what we can see right here is decision level type 1. Agreed? You guys can see that, right? Type 1. And what we can see right now is that price rejected this level. And then price rejected it again, and eventually it broke out. Let's focus on this first rejection first. This rejection, well, before we look at the rejection, we have to look at what this decision level did, right? So actually, I don't cut price. Let's just block out this stuff right here. Runs. What did this thing do, right? This decision level, it took out another decision level. So show you that. Page 4. How you do this is you will mark the result of the push down. So the open, this guy the line from the line to close right here, right? And then you pretty much bring a box over and you see what did this close below, right? And as you can see, it actually closed below a gap, another decision level, right? Right here. This decision level is important because you'll see again that this decision level closed above this guy right here, right? So let's look at this again. Why are these levels so important? This decision level was created closed below this buying decision level, right? That closed above the selling decision level. So with multi-time frame analysis, we would have already been able to determine that we're already bearish and probably price found something here and it's giving us a time a little pause in the market like gold does. What it'll do is gold likes to do these massive push downs for sure. With any other pair, you could sense that as well as with these massive push downs. It'll find something, consolidate, drop down, consolidate, drop up, consolidate, go up, consolidate, and then whatever, go its direction. All right, so we want to know how and when we can get that shift in the market, right? So price found something here and then created a decision level. As you can see, check this out. Even this is important too. I hope price, yeah, it does let me rewind time. Okay, so as you can see, even the result of this push down, this is actually not a decision level here as well, right? This resulted into the breakout of multiple buying decision levels here across. So it's pretty much like a game of cat and mouse chasing decision levels. That's exactly what it is. We just draw out. Yeah, let's just see something here. Okay, we have a decision level here. Open and close. And open and close here. So what you can see is if you draw a box across from here to here, you'll see that you have a breakout of a decision level. And like I showed you in the theory of the type 2 is that price could either come back down into either your source point or it could come back to your breakout level. In this example, you just had a break and retest of your decision level and then price continued to go up. So when you see that and you see that price had sustained that push up for so long and also while breaking all these decision levels, when price comes back down to it, you want to see exactly what happens when it comes down to these levels. This is a decision level, and they were just broken out. What broke it out? It was this open and close. And then what you can see is that you have a confirmation of this level here. So this is I'm introducing another concept called now we're gonna look at each rejection and the double rejection, right? It's when you can use decision levels more than once And actually, you could use them up to 3 to 4 times. From my testing, from my experience, what I'm seeing, is that most of the time your swings are going to start with either 2 or 3 rejections of a decision level. So you can see how you have this 1, 2 rejection. This is a swing. You have 1, 2, 3 rejection of this decision level here. 1, 2, 1, 2. And then you have something like even such like this. 1, 1, 2. And then you can see right here, you have one rejection here, and then one direction here. So let's look at this really quickly. On H4, what you can see is that this upon this rejection is close. So this is type 2, right? It took 2 candles to consume the open of this candle. So we have now a bearish breakout, right? Your terminology and what you say to yourself is that, okay, price found support here. We're bullish. We're bullish. We created a decision level here. We created a decision level here, but the decision level or the result of the creation of it did not, let's just say it's type 1, it did not close above this level here. These guys, or whatever is happening here, it's open and close. Even if I mark it out, one open, open, close, or yeah, close, open, gap level, it did not do anything to this. It didn't reject it. I mean, or it didn't do anything. It just stopped there. So it's just, you could just call it indecision. But then the next candle, it shows us rejection. It opens up, rejects this level, and then it closes below. And then with time and price, which we will also go over in multi-time frame, you will see that, okay, it broke out. Your terminology would be that any pushback up would be a pullback. So whenever there's a breakout, there's always going to be a pullback. This is just the way the market works. This is just the way the market moves. And that is just how it always is. It's always going to break something and pull back to something. And whenever we have these breakouts like this, for example, these pullbacks can be, these counter trend trades can be dangerous for us, right? Because we see that price just did a huge push up, and it's gonna keep buying, but then it's somehow finds something here and then it drops down, and we get, it's like, again, what we reach right over. It's like a game of cat and mouse, but then we're not even we're not even we're no longer riding the dragon. We're chasing the dragon now. So with this, you'll be able to be 2 steps ahead of the market. If you can read the decision levels correctly, along with multi-time frame. So what you see here is that price created this decision level and it closed below this bullish decision level breakout. Boom. Okay, great. And you can see that even this push down closed below decision levels that took price up, right? It closed below here. So even the slightest closure of these open and closed levels signifies that price, if it buys up, it's only just pulling back. It's only just pulling back. And what you see is that price closed, it, it price rejected our level and then continued to go down. All right. So let's go to another example and I'll see if I could answer any questions if you guys have any. So something like this as well. And multi-time frame is going to be hella important. But I'm just prepping you guys for that with just being able to simply identify them. The SNR. So you can see right here, SNR. Yes, it's respecting your SNR level. It is. It's respecting your V pattern, but more or less, it's respecting. More importantly, it's respecting your order block level, or excuse me, your decision level. So, to give you some insight into smart money, I know, and I wish I learned this in smart money before I learned SNR because it would have eliminated a bunch of problems with algo or smart money trading is you have like an order block, for example, order block level, and you see that price is coming down into it, and then we want to buy in this zone, right? We would mark out the zone, and what happens is sometimes you see that price actually does that. It respects the level, it rejects the order block, and then it goes, and our stop loss would be right here or something like that, right? Our entry goes. Then sometimes what happens is price actually closes below this level, and then what will happen is you'll get something like price coming back. Yeah, you'll get this reaction, and then the price will go down, right? So then where is you see you have a breakout of this decision level. So let me just change the colors. Just then you guys have more clarity. This would be whites. And then you have this breakout. What you would see is that you would have, let's just say something like a gap level here, a type 1 or 2 gap level. So you get the breakdown below of this level or this order block or whatever, and then price it will go, and then it's gonna wick this level, and you'll say to yourself, I'm in profits. Um, Let me set my trade to break even, and then price takes you out. So I wish again I wish I knew this stuff from. Oh, I wish someone taught it to me in smart money. So then actually it would have eliminated a lot of problems for me. Um, Knowing that if this order block level or decision level, excuse me, is being violated, um, any rally up is just going to be just a pullback. So what I mean by rally is just this buying up, right? It's this rally was just a pullback into our decision level. And then it could be just in form of like a wick or yeah, like a wick rejection. be like something like this and then this. So it will be a bullish can. Oh no, because yeah, these are supposed to be gray. And you'll see that this would be like a yellow candle, and it's rejecting your level. And you get that double rejection. So you can confirm before taking the initial rejection. The reason why we like to wait for this right here, this initial rejection, is then it confirms this breakout of this level. Because then uh, the reason why we like to wait for that initial rejection, so something like this, is that when you see that it rejected this level, you can take this level, this trade. You can, no problem. But the reason why we like to see it being confirmed is then we know that when price does come back down into it, it's already a confirmed level, and we can begin to take shots at this level when we combine our trend lines like this, and we can get these sharp entries like this, continue price going up. This is another signature trend line that I will show you as well, and yeah, that's how you will be able to do it. But confirming the level is important. And we'll look at some more examples just now, right now. So even just like this, right? You would then find a trend line, something like that, and then you would get it a really tight entry like that. And with multi-time from analysis, you will be able to find that it's also rejecting stuff over here as well, which we will cover. But essentially, yes, that's what we're going to do. It's basically decision levels is basically decision levels. It's basically the break or retest of a previous DL. That's it. We like to look at what price does when it comes to a previous established decision level. So now we're going to go over something called OHLC, open, high, low, and close. And this is more going to be in line with how a candle is being formed. And the way a candle is being formed actually gives us some important information. And then with that, we'll be able to see if a level is going to be rejected or if the day is, excuse me, if the day is going to be bullish or bearish, and if we're rejecting or breaking out. So what I mean by that is, again, we have a bullish candle and we have a bearish candle. Right? Basic premise of what I mean by OHLC is that this is a bullish candle. If you're bullish, price is going to open up here every time. If the market in volume is bullish, every time it's going to open, it's going to create its low, it's going to create its high, and then it's going to close like this. This is pretty much how a bullish candle is being formed every single time. Every single time. So if I were to put this in writing, let me just slide this over. If I were to put this idea in writing, you would say that if bullish, price must go down first, right? If bullish, price must go down first. Open, low, high, and then close, right? Same with the flip side. If you're bearish, it opens up here, high, low, and close. It'll make sense in just a moment. I will show you that in the chart as well. And so if bearish, price must go up first. Do you guys understand this?
Yes, indeed.
Yeah.
Cool, cool, cool. Nice. So let's look at that real quick. You have a decision level here that was once rejected. And then you're looking for, let's just say you want to look for this movement here. So about 120 pip movements, that's great for one day. But let's just say that you're monitoring this level and you want to get involved. So you see that the market actually closed right here. It's open, high, low, and close. What you will see then is you want to observe how the next H4, you want to see how the next H4 candle is being formed. And then with multi-time frame, 1 hour, 15 minutes, we will see that those time frames, it's actually on because we're going to mainly focus on mainly focus on daily in H4 for our direction. And H1 down to M15 is mainly going to be to monitor during those intraday movements, is to see if these levels are either being rejected or broken out. And I'll show you that in just a moment. So if bullish, right, what happened is what the price opened up here, it dropped into our level. So at that very moment in time, you're going to be monitoring what happens, because this H4 candle, you have to wait for the closure of H4, right? So you also, again, using multi-time frame, let's see if I can cut price and show you. Multi-time frame, you will see, goodness, you'll see that H1 also rejected this level. And then when you see that price again opens low, and then with the confluences that you'll be stacking up, you'll have you'll multi-time frame, you'll already establish that you're bullish at this very moment in time. With H4, you'll see that this level is already confirmed. With H1, you will see that, all right, well, I actually have a decision level that's an H4 decision level that's being rejected on H1. There was no breakout. And now I can even find an entry right here with a trend line. So you could probably use something like that, or even tighter. You will find something like let's see. And we'll go over crossing trend lines and all that stuff. It's pretty powerful stuff. Um, let's keep it simple. Let's just for your demonstration purposes and see how and how we do these entries is stuff like that. And this is also again another signature trend line. And pretty much what you'll see is that when you are monitoring price in real time, so as you're trading London session or New York session in real time and you're monitoring this level, what you'll see is that price jabs into this level. So in real time, actually, this candle is looking like this, right? If we cut price. Even this candle here, let's cut this one. In real time, what you're going to see is the candle is going to open up here. It's going to open up here, and then it's going to start dropping like this. But in real time, it did not close yet, right? So as you see that you already have a couple confluences already, and price is now buying up and stuff like that, or rejecting and forming a wick. So it's like doing this. This is when you start buying and putting your orders in. And you see that we have those like layered entries and stuff like that. This is when you see that, oh, price is rejecting my key level and then it's rejecting my trend line. So let me get this, let me enter here and uh mm, risk management is later, but pretty much that is what you will do to uh wait for the rejection and obviously see what it does, right? After the rejection, it created a decision to go up, created a type 1. So if you got this entry here, down here, and it created a rally decision, in theory, you would hold the trade because you actually have a breakout. Why is this level so important? Because if you were to look at this open and close just only on this time frame alone, you can see that it closed actually above this decision level here, right? This open and close. This open and close. The open to the close this. So you would need to see because you're all when you combine multi-time frame, you're bullish, but then you see that it closed below this on H4, so you would be like, well, I'm bearish, right? Because this is a support level that's been confirmed and price just closed below it. But with the help of multi-time frame, you would say that I'm bullish at this moment. And what you essentially want to see is price consume again. If you were to buy from this point here, you want to see price consume the level that broke the previous decision level. So closed here, and then you just manage the trade. Let's move the price forward. And then what do you see is actually, so when you look at my entries on I'll share them with you. It's that I'll get this initial entry, and then I'll also get stuff like this, and then also add in something here, and then that one these these layers would be enough for the day, and I wouldn't have to swing prices. Essentially, I would just be able to take advantage of one price leg and stack the shit out of it and really suck the juice of movement out at a very logical and reasonable based way, right? So what you see is that it broke above this decision, this gap level, and then what do you see is price actually rejected our decision level here, and also the previous breakout level. So you have multiple confluences again, and then with our trend line, you will combine it just like such. Let's see if there's a cleaner one. Yeah, right here. Right there. You see that, you'll see that, okay, price broke out. It opens. If I'm bullish, price needs to open, low, high, and close. That's what happens. And when you see that happening, I guess as you're practicing the system and you're forward testing or demo testing or live trading with a small account or whatever, when you're working the system and you're seeing this happen in real time, seeing that you have a breakout, so you got this entry, for example, and then price opens up and it drops, it shouldn't scare you to see that, oh damn, the candle closed and it's dropping. It just took about 20% of my profits away from me. No, that is just how candles are formed. If you're bullish, just know that the rule is it always needs to go down first. And uh, this rejection here, so we can look at, you can even get earlier signs. Well, I know multi-time frame is probably it's gonna be your biggest enemy in the beginning, but it's gonna become your best friend. And very soon. Um, oh shit, they don't have the data point, but multi-time frame will be able to tell us to see that if that level will hold or not. Sorry about that. It did not hold, give me that data level. So yeah, let's look at some more examples of decision levels, and then we'll go over trend lines. Again, I still think that we focus on mainly on DLs. We can really take this system to the next level. Just a break in and retest of a decision level gives us the direction, right? So what do you see here? This is how you would mark it, right? Type 1 is right here. And then the result of this push down, you would mark it from that level right here down to the close. And you can see that in time, you would actually wait for something like that to be either, you would wait for either a breakdown or a rejection. In this case, it broke down. So what did price do? Right? This is our breakout level. So as I mentioned earlier, this is our source. This is our SB, source break. Say SB. Price actually just rejected our SB. And I'll take these entries and I'll take the shots at the breakout level because they do work. And when you pair it with trend line, you have just those confluences lining up for you like that. When you get that tight entry, what do you do to manage this position? Is you look for price to create a decision, either go down or up. And what do you see is price created another decision level. This is type 1. Price rejected this type 1 along with our level. So that's like a confluence that you have. And then came down, broke out this SNR. We'll go over that in just one moment of when a decision level breaks out a classic traditional SNR. That is also valid for you to determine the priority of a decision level. It is valid to see. Actually, let's explain that right now. When you have the V, right? And you have a decision level being formed. Let's just say type 1. When price breaks this level out, that is also a breakout. It's the break of just a regular SNR. So like this right here, right? Just open and close, or just from this rejection, you have this breakout right here. It signifies a breakout, yeah. Where did it pull back into? It pulled back into our decision level that broke out. And then how do you get back in this one? Same thing. You just look for a trend line. You see perfectly. Boom. It's rejecting our level. If I am bearish, what needs to happen is price will open high. And then as you see the candle on H4 rejecting, closing, creating its wick, that's when you start lining up your orders. And then you'll see that it closes and rejects that level. To manage the position, we'll go over all that again as well. But pretty much, if you guys watch this video and you're taking notes, to manage a position, you want to see price break the decision that took price up. So, as you can see, this decision level right here, type 1, price broke it, right? Price broke below it. So that gives you sign of continuation to the downside. And with the multi-time frame analysis and the trend line confluences, you'll see that, yeah, that's true. Price broke down and any push up was just a pullback. And this would also be another opportunity for you to get involved. Let me see if I could go back in time and see on what H1 is telling me right there. Okay, so again, you can even see that on H1, these are H4 levels, but on H1, what you see is you have this decision level here, H1 breaking below, or H1 even. H4 would be our priority, but you can see that when you do the refinement of this H4 level, so within I guess I can't dive in too much into it yet, but when you use the multi-time frame, you'll see that to confirm your entry or such, you're controlling, each one is going to be used for control. You got in the trade here, so let's actually mark out this candle here. H1, what you're going to see is that as you're flipping through the time frames and you're managing the position, or you even enter on this time frame, you line up other decision levels. If there's the market is fractal. You know this terminology probably from smart money or anything, but anything that happens lower time frame will always replicate up into the higher time frame. So you can see that H1 broke below our H4 level, and it by creating a decision level, we have rejection. So we have a confirmation of our level, and using H1, then also we have more confluences such like that, where you can get those tighter entries and, you know, being in the right side of the market and managing the position. Also, we'll go over that, but do you guys follow me so far? Is there any questions? I know it's a lot to take in at this moment, but yeah, uh, I think the more I show examples, the more you'll be able to get this right.
Yeah, I'm
Is
following and I really love it. See, and this is exactly why I've joined this, because trading smart money for me wasn't always clear if it's just a pullback or if, you know, if I can add some position or what. It's always kind of, you only rely on the higher highs and lower lows, so you really don't know if it's reversal or it's pullback. So now it's gonna make much more sense.
exactly just how you worded it, the higher highs and higher lows, are they going to hold or not? And this is going to, yeah, this is going to show you which one is going to hold, which one is not going to hold.
Um,
And yeah, go ahead. Mhm,
could you go back to that area you were just at?
mhm.
It was when what was it? The type one had like broke through another engulfing, and then you took a trade
Um,
from the source break, I think.
okay. So something like this, maybe?
Yeah, something like that. But
Hmm.
only in this case, like I see it working out. But in the
Yeah.
case before, it was like so after the break, the second candle closed above the source break,
Yes.
but you took a trade. See, in this example, it wicks, so then I kind of understand why it would work. But in
Yeah.
the first one, it closed above and then there was wicks. So like
Uh-huh. Yeah. I do remember seeing that. Okay. So yeah, that's probably where multi-time frame is going to help us filter those false breakouts. So okay, let's see, for example, let me see if I can answer that question in a in a nice way. So we have okay, even like this, right? This is our this is a decision level, right? Like, even this gap level is decision level, because if you pull it down, it closes below something. It's closing below something, and um, I wish we could. Yeah, I can't bring in multi-time frame yet, but closed. Let's just pull it over here. See something. Let's just say that it closed below this wood, and it actually did. It actually did close below a key level right there. That was the key level. You can see even it gets that rejection again to source break of that. What there was there's a level here that eventually price broke and price rejected. But where did it come from? It came from the open and close right here. So you see that that level is being now um shit. I'm trying to answer your question, but I'm actually doing everything the right way. So like okay. Um, mean the right way, meaning like I'm explaining like how you would do it and not avoid the problem. Um, uh, so the decision level is right here. Um, you see that there is a drop decision here. So it's a type 1 drop decision that gets violated. Price opens up. It's still significant. Like you can still use this level
Okay.
and and
Like as long as it gets, I guess, rejected, even if there's a close
yeah.
after.
Yeah, that's exactly yeah, like that's sometimes like you guys make the answer so much more easier to explain. Yes, that's exactly it. Like when you see that price, you have let's just say you have a source level and then you have a source break level. Um, when the price is going down, blah blah blah. When price is going up, you want to see like as day traders, we're gonna take losses, right? So we have to take our we have to use our uh, we're gonna take losses, period. Like, and it happens to the best of us, but we will take shots at these levels. So this our source break. I mean, this is our source on the top, and I know you probably don't want to hear that, but yeah, we do take losses. I take losses as well, but it's very minimal, and yeah, I don't know why I keep doing that. It's very minimal, and if your source break doesn't work, then you're going to uh wait for your source. That's it. That's it. Even if you guys have watched AKFX or I I don't want to bring in ICT. AKFX is probably one of the uh, he's one of the I would say goats of SNR. He says that if you have something like this, have a level here. He uses SNR, but I don't. But for example, let's just say, right, you have an SNR level here, an SNR level here, this QML pattern. Um, he's going to take the risk of here and see if price is going to give us the reaction there. If not, he'll take the loss, no problem, and he'll even also enter there because he's already determined the overall direction, and now he's either looking at the source break or the source, right? There's going to be a source level here, uh, source level in this area, and then what is the source break, right? It's going to be something here, and we want to see if price is going to respect that level, right? And you can already see if I do something like this, um, what we're going to do is we're going to try to pair trend lines with this level and see if those levels get rejected. And then we eventually want to see if it's being rejected or being closed or not. And with multi-time frame again, we'll be able to see if this trade will hold or not. And 15 can give us that answer. H1 and 30 can give us that answer as well. As you see, because if you have a decision level on H4, right? Within that H4 decision level, you're gonna have M30 decision level. Same thing, right? So you have it like let's draw it out. Let's just say this is a daily candle. Let's just say this is a daily candle. In the wick of the daily candle, there's going to be H4, and then within the H4, there's going to be H1, And then within the H1, there's going to be M30 and then that too. We're going to go only down to M15. And with multi-time frame analysis, you'll see that you'll because the market is fractal, there's going to be decision levels within here. So if I were to show you, you'll see like, all right, we have an H1 level here, and then price comes up here. Excuse me. See. So let's just say, yeah, let's do it that way. Let's just say this is a daily decision level here. And within this daily level, you're gonna have those lower time frame decision levels. So sometimes even on daily, we don't enter straight from the daily. We 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 will determine direction and market flow with daily, and we'll see how the daily closes to determine whether or not we're bearish or bullish. But with prices coming up now, say this is H4, say this is H1, say this is there, 15. And within the wick, you have an M15 decision level. So it would be something most likely like this. Yeah, it would be like that. Price now is coming up into your level, and it goes like this. So eventually we want to see, obviously, the daily level, right? This is our daily decision level being rejected. Or yeah, that's exactly right. We want to see our level being rejected because why? Because we're bearish. Um, and if this big push up closes above our level, right? What does that mean? That means that our decision level is no longer valid anymore. It's actually a breakout. This is how we consider a breakout. No longer will we look at this as being the breakout, this classic SNR. The break of this level here, this order block level, for example, or however you want to look at it, decision level is what's going to give you a sign of continuation or rejection. So let's just say that this daily candle, which is up like that, and it's rejecting our levels, it closes below our level, right? Remember how I said many of the times the swing starts with the swing will get a double rejection. Uh so then next day will happen will be where you'll see price opens up and then it'll retest either the breakout level right here and then drop, or then it'll come back and retest the decision level again up here. So let's look at some of those examples now. And yeah. Once you guys get multi-time frame, bro, it's gonna be game changer. Today it's just identifying and identifying what these levels are, okay? Um and I guess your homework, I can just give it to you right now. Your homework is going to be identifying DL type 1, 2, or 3, and identifying what it broke before. And observing what happened when price came back to the breakout level or the source. This observation is what's going to clear up a lot of your doubts. Um, even if you begin to start getting curious and looking at multi-time frame on yourself on your own throughout this week or this weekend, um, you will see that just observing what happens when you get a break of a decision level on time frames, multiple time frames, then you will you'll see exactly how it works. Um, I think what I'll do, just for benefit of time, and because I want you guys to, I want us to take this slow, but I want you guys to work fast. If you know what I mean. Work fast as in work really, really hard at getting each topic, but taking the process slow and trying to get it right, right? So I guess if I were to give you a teaser or something in form of multi-time frame, what we're doing with the decision levels is exactly what we're the same thing on the higher time frames. So this is a monthly, right? So you would go ahead and mark out monthly decision levels.
So we know straight away we are bearish, yeah, on monthly.
Yes, yes. Yep, we are bearish, monthly bearish. So setting the market flow, again, I'm gonna go over this again with MTF, but market flow monthly would be bearish. Means any push up is only just a pullback on the monthly. And writing this down or keeping this, in the corner of your chart somewhere, just knowing this right here, that even though, okay, we have a breakout, you have these sustained push-ups. This is almost 1,000 pip push up. Um, it was just a pullback because what happened, what then happened was it came back down, and this monthly candle is it's only just a week in, but uh we have a breakout of it. So it gave us sign of continuation. As you see, you have a decision level here. It got rejected one time, it got rejected twice, and then the first time it broke down below. So overall you would be bearish. And then using multiple time frame analysis, we'll go to weekly time frame and see that within that monthly candle, within this guy right here, uh, let's do it like this. Oh yeah. You mark the open, and then you see what it closed below. It closed below this. So go to the weekly. You see that you get evidence of that on the weekly as well, right? This weekly break below this monthly key level, right? This our weekly source break. So even weekly, you have a breakout of it. So let me just make this weekly. Weekly is even closing below, and any rally up is going to come back to the source point. And source point, like I said, with the refinements, is that most of the time, if this is your key level, or for example, your refinements are going to be up here. right? So you can see that the refinement in this weekly time frame is here. Let me show you what daily gave us. Daily, this is weekly. You also have daily. Then you go to H4, and then you're going to see that H4 daily lines up. Actually, there was actually another H4 level here. Believe it's this one. Oh, wait, wrong tool. Believe it's this one. Oh, yeah, this one. It just taps right into it precisely. Okay, so let me just make sure I got it right. Let's see. Let's see. Let's see. I mean, it's very precise, almost very close. Uh, I don't know if I'm marking it wrong or not. Yeah, I'm marking it right. But yeah, you could very close, very close. Um, hmm. Let me just see if there's H1 as well. So this is H4, H1. Oh yeah, I think there it is. Is this one? Yeah. It was the H1 level that got rejected, and I took the Century actually. Um, but you can see that when you set the market flow again, uh, you would have been overall uh where is it, monthly bearish. This big pullback when you see that price is coming back into your monthly level right here. This is our monthly decision level, multi-time frame analysis. Then you'll slowly begin to identify the weekly levels. So let me actually save all this. I'll bring these lines back in just a moment. And we'll hide them. Um, Let me show you the idea of OHLC, right? So we have the breakout of this level here. This is weekly. And like I said, or like what is known is that when there's a lower low, there's going to be lower high, lower high. And many times, sometimes you'll just get the retest of this level and then continue going down, or price will either test the higher high and then go. In this right here, what you see is this is your lower low, but it didn't actually tap into it. It tapped into our source point. So you could see that actually it tapped into our higher high, for example. But this is a lot of drawdown here. This is almost 300 pips of movement here. If you took the sell, you would have probably been have to discourage. If you took the sell there, you would have been discouraged. Then you would probably went straight took the buy, and then you probably get sucked back down, and then took the loss for and lost the sell. Um, so okay, so you have the break of the decision level, and you see that price. So this is where multi-time frame is your enemy because I don't know if I should do what's that. Let me I guess to tease you, I will. Um Overall, the monthly candle close below our decision level. We can see that also happen on weekly, close below. Then what we'd expect after a breakout is a pullback. A pullback can also be lucrative. Is even though it's a monthly pullback, it doesn't mean that it's going to pull back into the monthly level in one straight shot and then go continue going down. In between, there's also levels that we need to consider as roadblocks or um, just playing with the fractal nature of the market, right? So if what I mean by that is, um, okay, you have a breakout, price is now, you would just automatically have to perceive the market to be in line to create a pullback because after a breakout, after this specific breakout, it also rejected something here, and we're gonna go over this idea in another class, another time. But it rejected here, and what happened was, if you look very closely, price created the type 1 weekly time frame. So that kind of initiates the idea that a pullback is going to be in play after the monthly breakout. So you can see slowly this candle doing its thing, right? The candle closed, created a type 1. The following week, this level gets rejected, and then it pushes up. And then where does it go to? It didn't go to our breakout level, it went to our source level. So we will take the shots at that level, and quite with real time, obviously you'll be able to, like, this gap over here, for example. I took this trade. It was about 120 pip move down. Yeah, it was about, excuse me, it was about almost 200 pips. I took the sell. But there was information here that told me that no, price is not ready to continue going down. And then I was like, yeah, I was in profit. So price came down, came down, and it pushed up, it closed, and it took out maybe like 30% of my profits. It's all good. It happens to the best of us. We don't need to catch the full move. So risk management will obviously go over that as well. But we see that price came back into our source level, and the reason why this is our source level is because you already have it first confluence is that it's been confirmed, and it's actually inside of our monthly decision level here, right? So weekly, this is monthly, and this is weekly. And then you see that what we would like to do is, because the week is not just going to end on a Monday, we have to monitor lower time frame. Let me say that again. The week, if it's starting out, it's not going to end on a Monday. We have to start monitoring daily closures and how daily is closing, and how there's decision levels here on the daily, and what happens after the daily gets rejected. And then the same idea of that is the daily is not going to end just at that rejection. It needs to wait for market close. So in order for you to be able to get an earlier sign of this true rejection is when you monitor H4, right? So let's see what happened. This is our daily level. And I believe it was H1, but let me see. Let me just mark the H4 just in case, and then I'll do the H1. H4 and H1. So what if you got into this trade, ideally you want to see is price closing below the decision level, so this gap level, right? Because this decision, this push up, this open and close took price up into it. So what your observation needs to be is overall we're bearish. So we got into our entry to manage the position. Okay, so we got in here, let's just say. We want to see the break below. Managing the trade, obviously, yeah, it's H1 and the control is M15 and stuff. And I'll explain that in another class, but the basic gist of it is that if you got this entry, you want to see price break below the decision level here. So let's see if that happens or if this level gets rejected, right? As we're managing the trade. So this is Tuesday. On the same, this is this Tuesday, Wednesday. Okay, so this is the end of Tuesday and Wednesday. Okay. So this is Tuesday, and then this is Wednesday, and this is Thursday. So let's see what happens, right? Tuesday closes, and it did not, you're still in the cell. It did not do anything. It didn't break anything that would signify price to go up. All it did was for you to invalidate the sell, obviously it needs to come back up here and break above it because this is already an established decision level here, right? These little things, these little push-ups, like I said, if you're bearish, what does price need to do? For the day is that it needs to open and create its high. And that's what it's doing. It's pushing up on H1, which can be deceiving when you look at H1 and not consider the overall market flow for daily and weekly. So you see this, oh shit, oh, price just, I'm in the sell and it's price just pushed up 30 pips, 40 pips. What do I do? You would still maintain your trade and composure. Uh, Obviously, you would have to pay yourself something here for sure, because there's no way in hell any profitable trader is going to let the market drop 160 pips and not pay themselves and then withstand this you know see their profits dying out. There's no way. Like you would have to definitely pay yourself something here, especially if you're intraday and end of the day, if price drops down 100 pips, that could be enough for the whole week. If you're risking right and you see that if you put in a 1% here or 2% here, you don't really need anything else. So, but anyways, the idea is this is the level that you want to see break, and because we're controlling on H1, this is the level that needs to break for us to invalidate the cells. Most of the time, our entry is going to be the invalidation level. What do I mean by that is this decision level, if price closes above it, that's when we close our trade. But I'll show you how you can avoid that, and because I don't use SL, actually. I don't use SL. And there's a reason for it. And yeah, if I were to give you a very simple explanation, it's because there's no way in hell. First of all, I do pay myself, like if it drops 100 pips, there's no way in hell I'm gonna let price come back into my entry price and then take me into drawdown. And you know, me not using a stop loss. So like say I'll say a stop loss is right here. Many people, what they do is they'll say that I'll just use a 35 pip stop loss, and within this range, it's okay for me for price to do this. It's all right. Price can do that, but no. Price can just continue going up. I'll show you why I don't use stop losses, and how you why it goes completely against everything you learned in trading. But I think my explanation it'll make sense that just simply what if price were to come back up all the way here and close above, well, then you would invalidate the sell, and then you would look for something else. But the idea is that you would have to pay yourself something. And, I'll cover that segment. We'll cover more of that stuff in the risk management segment. Um, so going back to this, invalidation for the cells is this blue line, and then we want to see this blue line. H1 decision level will be broken. So let's see if that happens. Yeah. So, oh, actually, no, didn't, but we would have early signs of that happening on M30, I believe. So actually, no, that didn't happen just yet. M15, yeah. Nope, not even on M15. So actually, you would still be managing your position. You'd still hold it if you're swinging, whatever, or you see that it rejected a level. You could find re-entries up here too. Um, if you look within this range, you have a level right here, right? And then you also have a level here.
So
That
you are
gets
not
rejected.
trailing your stop, yeah? You're just closing some positions and you're leaving some positions open.
Yes, yeah. So this main position here, what I'll do is I'll pay myself because I do trade I do risk high amounts, so I'll risk 3 to 4%. If it's like a say I'll go over the numbers for risk management, but I'm actually really big in the flip ca compounding community. Like I truly believe in that more than prop firms, but I'm getting into prop firms now. But mainly my profitability came from flipping accounts, so that came from like using high risk. So what I would do is say, for example, I would use like 10%, and then if it drops 20%, I mean, if it drops 20 pips or 30 pips, I would immediately close like 70-80% of my position, leave the runner on, and put my SL at break even. That's how you can grow your account, is just making sure that you're picking the right levels, and then obviously putting some size onto it. And when you get into profit 20, 30 pips, which is very hard. If you think about it, catching 20, 30 pips isn't an easy ordeal. It's actually pretty hard. So for you to be able to put some size on it and catch 20, 30 pips, that's more than enough. And my goal for you after this mentorship is to develop your instincts to become a swing trader. So you'll be paying yourself through partials instead of trying to look for entries every single day to, make money in your pocket. Instead, you're managing your swing positions, adding to your swing positions, and then also obviously being a swing trader, you would not just set and forget. You would have to monitor every day. So you could, for periods where you feel like the price is going to, and you will know, you'll see price will be pulling up. You won't be able to, we as human beings won't be able to experience that, those pullbacks in this type of entry, because you would see that it took about half of our entry. That's why we're paying ourselves here. So this position is it's just fine the way it is. We've already paid ourselves, and then we just ride the wave. And you can see that you can add a position here as well when you see that you have a decision level right here, bullish decision level. It gets violated by this push down, right? Break below this decision level. And you already see that this decision level was confirmed. And then you just combine some type of trend line. Let's see if I can find a nice one here for you. Nice trend line, nice trend line. I can see something like this. Yeah, perfect. Oh, why is this not extending itself? Okay. Yeah, there you go. And then this is another trend line. Yeah, 0.1, 0.2, and then your entry is at 0.3. Okay. So let me shift away from decision levels just a little bit, because I feel like if I give you decision levels and trend lines, you guys can practice them, and then I will also add you into actually, no, I'm gonna keep this exclusive just for us. Um, this video is just going to be exclusive, and I'm not gonna give you any other pre-record videos. We're just gonna take this and just keep it amongst ourselves, and we'll expound our knowledge. Um, so right now, I'm going to end the recording. Stop the recording.